Hi, this is Bennett Tchaikovsky, and welcome to Job Order Costing. A disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College, the South Orange County Community College District, or Chapman University. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2019 by Bennett Tchaikovsky. I encourage you to share this presentation and share links to this presentation on an unmodified basis. If you modify the presentation in any way, please email me prior to doing so at bennett1812@gmail.com to discuss. Note the author does not claim any copyright whatsoever in any companies or organizations mentioned in this presentation. The other parties are the owners of their respective copyrights. So we're moving now to job order costing. And what exactly is job order costing? Our focus is on the customer, and we're not doing mass production. And what we're really trying to do here is that if I have a service business, say if I'm working as a CPA, which is a certified public accountant, or an attorney, or an auto repair shop, or if I'm doing film production, when I'm doing job order costing, I'm essentially going to the customer. I'm saying, what would you like us to create for you? Or what can I do? What kind of service can I provide for you? So what I need to do is I need to be able to go through and track my costs on an individual job basis. Why is that important? Because if I don't track it on an individual job basis, I may not be able to bill back my customer properly. What if I had an accounting system that just combined all of the costs of my employees together instead of individual projects? And what if I have to bill on an individual project basis and I'm not keeping track of costs that way? It would be an absolute nightmare. Think about it this way. If I go into an auto repair shop, they're not going to be telling me, it's like, oh, the average cost of the auto repair is $500, therefore that's what you need to pay. Instead, they're going to give me an itemized breakdown. They're going to inspect my car. They're going to say I need an oil change, transmission fluid change, need new front brakes. And so they're going to bill me on an individual basis as a customer. They're not mass billing me for the entire expenses of the shop. They're billing it on an individual item basis. So again, think about for job order costing, the focus is going to be on the customer. Before jumping in, one of the things we really need to make sure as a business, we want to be determining the overall budget for the organization. And the reason why that's important is because when we're determining not only just the rates for charging our customers, we also need to make sure that are we going to be able to cover all of our costs. Now, as we know, we cannot pass every cost along to our customers, so we need to make sure that when we are pricing and we are coming up with various different rates, that we're going to have all of our costs covered. What you have to remind yourself is that once you give a price to a client, it's very, very hard to take it back and to change it. It is extremely important that you go through and you essentially are abiding by that price. And again, it's just one of those things where if a service provider quotes a price and then later on they turn around, they try to change it, that's a problem. Just because, again, that trust factor and everything else, you'll be out of business pretty quick. So with a job order process, it's requested by the customer and we're going to be building it or servicing it for the customer. The first thing we're going to be doing is we're going to be receiving the order. And even before we get into that, what you might be doing as a company, you might be going out and they might have an RFP, which is a request for proposal, where the client is asking for various different service providers to come through and say, how much is this service going to cost? For example, Most publicly traded companies are required to go out for bid for their audits over, they have to do every certain number of years. And what will happen will be is that the existing auditor will come in and make a bid. You'll have other auditing firms come through. They'll come up with a bid. And what you just have to really remember, if you are a company and you're giving a bid, is not to give too much of the secret sauce away. There's some larger companies that are classic for putting out bids and saying, oh, come in and tell us how you would do this. And essentially these companies come in and they end up giving free consulting. They say, thanks a lot, and door is shut, and there you go. So you always want to kind of be mindful of that when giving a bid, is not to give too much information. But in reality, if you're walking into a potential client, really you have had to have some sort of relationship with them before that's getting you in the door. You have a referral, you have somebody who's telling you that, you do great work, whatever it might be. So the first thing we're going to do is we're going to receive the order. We're going to predict that cost to complete. So we're going to give that estimate. Then we're going to negotiate the price. One of the things, and also prepare the bid, one of the things here is that when it comes to attorneys or contracts that are reviewing a contract, you have to make that in terms of a business decision. If you have a larger organization that says, here's the contract form you're using, we're not going to talk to you about anything, you may not necessarily have a choice. However, if there are certain things about your business, you really want to make sure you have an attorney to help you get the best possible deal. The other reason is why you also want to be using attorneys is that if you go on the internet and pull a contract, you're going to be your own attorney and you're a fool. The reason why we hire lawyers is for kind of like an insurance policy. We want the lawyer to do the work. We want them to help us negotiate or structure the contract and tell us the goods and the bads. I'm not telling you to get an attorney from the very inception. In fact, you can prepare a draft of a contract if you know what you're doing, and then have that attorney review it and say, okay, well, is there anything here that's missing? And having the attorney draft the contract is just going to change the course of the negotiation. So it's something that's really important that you want to remember. Also, if the attorney botches the job, you can sue them for malpractice, which I'm not recommending that you do, but it's really like an insurance policy. So when we're preparing that bid, we want to make sure that we have enough money to cover our not only the job costs, but also for our overall overhead that may not be coming through. The next thing we'll be doing is we're going to be determining the production and like the staffing. Do we have enough people to do this job once it comes through? And if it's a really big job and it's like just kind of imagine it like a large construction job, you want to make sure you have the right people there kind of overseeing this entire process, mainly because if the client starts saying, oh, I want X, Y, and Z, and it's not in the contract and you start giving it to them, it's really hard to come back later and say, well, here's your bill for an X, Y, and Z. And the client says, no, we're on a fixed contract price. It doesn't matter. So you really have to be careful that when you're doing a job, that it's almost kind of like a contractor. This is probably the best way to think about it. If I come and I'm contracted to build an addition to a home or add on an extra room, and then all of a sudden the client is having my workers make a swimming pool, then it's like, wait a second, no, that's extra. You have to stop there. We have to supplement the contract and go forward from there. And with the billing and the rates, it's really going to be depending upon market forces. What kind of rates can you get? What city are you in? There's a lot of different things where you have to consider. Some cities are a lot more expensive than in other cities. For example, if you're doing any construction in the city of Santa Monica, I've heard of a one-room addition costing in excess of $200,000, where if you're doing that same construction in the Inland Empire, it might be as little under 10 grand. So again, you really want to make sure that you're billing correctly. And this is really about knowing the industry, knowing the pitfalls, and really knowing your particular business and the experience. And this kind of goes back to billing. And I want to really emphasize this, is that when we were looking at our last slides, we were kind of looking at in terms of how we were allocating factory overhead to work in process. This is going to be a little bit different because when we're doing job order costing, we're going to be using a lot of estimates. I know what my direct materials are. I know what my direct labor is. However, when it comes to factory overhead, I'm going to need to estimate that because I need to bill the customer fast. If I don't bill the customer quickly, I'm going to go bankrupt. You have to bill the customer promptly. If I do something and it's under the contract I'm allowed to bill, you got to bill quick. So what we're going to do here is we're going to come up with an estimate of factory overhead for every one of the different jobs and essentially apply this to the machine labor hours, machine hours, or otherwise. So one of the new concepts for job order costing, as opposed to what we were looking at previously, which is just kind of the introduction, is that we're going to have a work in process account for every customer. We still have in our inventory, we have 3 accounts. We have raw materials, we have work in process, and we also have finished goods inventory. With this account, though, with job order costing, we can have up to 100 work in process accounts. It just depends upon how many different customers we have. So when we have multiple work in process accounts, we're going to be tracking each customer separately, and each customer may have its own beginning work in process balance. The other thing that'll be a little bit different here is going to be indirect materials. What we saw from our last chapter is that we took direct materials and we took that out of our raw materials account, meaning materials we placed into production. What are indirect materials? Well, similar to indirect labor, indirect materials can't be applied to just one job, rather they are being used through all the different jobs. So in that case, those indirect materials are going to become a part of the actual factory overhead. Factory payroll is going to consist of 2 components, direct labor and indirect labor. And the direct labor is going to go into the individual work in process accounts, while the indirect labor will go to factory overhead. What is direct labor? Directly attributed to the particular job. Indirect labor, more of supervisor type salaries. I can't, with the indirect labor, doesn't trace to one particular job, rather it's all the different jobs. And so the other part here is that instead of taking the actual factory overhead, and remember, when it comes to, we have these T accounts for factory payroll, and we also have a T account for factory overhead. What we're going to be doing is we're going to be estimating our factory overhead and applying it to the various different jobs. What that is going to cause, though, is at the very end of the period, we're going to be comparing our actual overhead to our applied overhead, and that may create a difference that we'll have to go through and figure out a little bit later. So how can we estimate factory overhead? Remember, what we're doing here is when we look at a work in process account, we know direct materials. We know that that was what was put into the job. I know direct labor, and those were essentially, we know what a particular worker worked on the job for. When it comes to factory overhead, I can't wait until the end of the period to apply it, or the end of the year, or whatever the period of time is, because what I need to go through and do is I need to estimate my factory overhead. And there's all different types of ways you can do it. And you want to kind of say is that, like, let's kind of look at some historical data. What is the relationship between direct labor, machine hours, direct materials placed into production? And what's going to give us that best estimate for our factory overhead? Remember, the 3 components of what goes in a work in process: direct labor, direct materials, factory overhead. So we're talking about how do we estimate this factory overhead. So what we're going to do here, one way is we can do it is if we're going to be doing this based on direct labor hours. So what we would be doing is we would taking the total estimated factory overhead for the entire period. We divide it by the estimated direct labor cost, and we're going to get a direct labor rate per hour. We multiply those direct labor hours by the direct labor rate per hour, and then the total, this is going to give us the total applied factory overhead. So then I've got to get my total estimated factory overhead divided by the total estimated machine hours. This will give me my machine rate per hour, or MRH. I then multiply those machine hours by the MRH to give myself the total applied factory overhead. So one of the other things I want to mention, just because you don't necessarily see this in a lot of textbooks, are the fringe rates or the cost of an employee. And the cost of an employee, like when I'm coming up here and doing this either for direct labor, is it's not just their wage rate per hour. And there are a lot of other costs associated with employees, especially depending upon the state you're operating out of. So right here, you're going to have your base hourly rate. You've got the federal add-ons, right? As an employer up to a certain dollar amount, I'm required to put in 6.2% for Social Security taxes or SST. I have to make a contribution of 0.145% for Medicare. And then there's also federal unemployment tax insurance. I might have some state add-ons, which are state unemployment insurance or the employment training tax. But in addition to that, if I'm hiring an employee, I may also, depending on the state I'm operating in, I may need to have workman's compensation insurance. I also may need to have, if I'm offering benefits to one employee, I've got to offer it to everybody. So if I'm paying for medical and dental expenses, those are also costs that I should really be including in my labor rate. Additionally, I also have employment practices liability insurance. What exactly is that? If there's sexual harassment or age discrimination in the workplace, there's a cost for that as well. The other thing to think about too is that should I be allocating something here for sick days and vacation days? For example, if I give 8 weeks of vacation per year to an employee, that employee is not going to be really able to work 52 weeks out of the year. They're only going to be able to really work 40 something. I can't even add anymore. 52 less 8 is going to give me 44 weeks per year. So I may need to adjust my rate, my hourly rate, because the hourly rate is really what I'm going to be paying out the employee for the full year. But for the sick days or vacation days, I may need to go through and make an adjustment or make that rate even higher so that I'm covered for that. And this is going to give me my total hourly rate, or essentially my base times my fringe rate to get my direct or indirect labor. I've seen some employers use as high as 30%. This right here will probably get you around 10% right off the bat. Workman's comp, medical, dental, employment practices, even more. And then when you consider sick days or vacation days, this hourly rate is actually going to be a lot higher. So how do I go through and apply factory overhead? Well, factory overhead is basically I'm going to have in my work in process, my direct materials, direct labor, and then I'm going to take out of the factory overhead account as I'm going to go ahead and apply this factory overhead over here and over here based on whatever the rate might be. Then I'm going to be putting in my actual overhead on this side. Now, what can happen here is that applied overhead is an estimate. We're estimating how much factory overhead we have for these two particular jobs. Remember, we don't want to wait to do this process. We want to do it immediately so that we can turn around and bill our clients. So I have this difference between actual and applied overhead, and what are we going to actually do with that? Because remember, this account here has to go to zero. So if the applied overhead is greater than the actual overhead, the overhead has been over applied. As a factory overhead account has to equal zero, the factory overhead account would be debited to make the account zero. And if the over applied amount is immaterial to cost of goods sold, we go ahead and just credit cost of goods sold. If the over-applied amount is material, then what we're going to do on a pro rata basis is to distribute the over-applied amount via credits to work in process, finished goods, and cost of goods sold. Why? Because these three accounts were infected with the material over application. So just going back here real quick, if my overhead, if my applied overhead is greater than here, I'm going to need a debit to close out this account, because if this was, say, 10,000, this was 20,000, I'm going to need a debit here to make this account 0. So for every debit, I need a credit. If it's small, I'm just going to put it to cost of goods sold as a credit. If it's larger, I'm going to do a pro rata between work in process, finished goods, and then cost of goods sold. Why? Because that's where the applied overhead has ultimately gone through and traveled to. Underapplied is kind of the same concept. If the applied overhead is less than the actual overhead, then the overhead has been underapplied. I didn't do it enough. So if it's immaterial, we're going to have to debit cost of goods sold and credit the factory overhead to make that account 0. If it's material, then on a pro rata basis, I'm going to go through and distribute the overapplied amount via the various debits to work in process, finished goods, and cost of goods sold. Okay, so right here, the factory overhead, I'm looking at the actual to the applied. If the actual is greater than the applied, I've underapplied overhead. If the applied is greater, I've overapplied it. And that's it. So stay tuned for my next video where we will be going through some various questions. And if I don't put that up publicly, I want to apologize. I'm trying right now to get permission from various publishers to use their problems in teaching this to you. But in any event, thank you for joining me today. Please do not forget to like and subscribe, and I will see you on the next video.